Welcome, everybody. Thank you for joining us to view our podcast on how to start a VC. With me today, I have Taryn Andersen. She will introduce herself shortly, and she is our speaker today, who I am asking a lot of questions about. If you want to start your own VC, what is the right way to do it? So, Taryn, welcome.
Thank you very much.
Thank you for joining us. Maybe you could start with introducing yourself shortly and all the experiences that you have, which is really interesting for us.
Thank you very much. And thank you very much to FINE, the project that you're supporting and helping to make it bigger. Well, I'm Taryn Andersen. I'm half Danish, half Spanish, based in Barcelona. And my background is coming from the private banking. Then I moved to a venture capital in 2016. Our VC started in 2013, investing in 80% of the portfolio in United States and Canada and 20% in Europe. Now we are in the fifth fund. We are sector agnostic, business to business, and we are just closing our fifth round.
Okay. Wow, that's really, really awesome, I should say. And yes, you are right. I think people have found our podcast through the FINE project website. But as Taryn reminded me, it's true, we're doing this podcast as a part of the FINE project, where we're trying to promote the cooperation of investors while investing into fintech. So you're absolutely right there. Okay, so you've already had a lot of experience in starting VCs or VC funds. And we know that there are some investors out there, most of them already with experience in investing, who are considering to start their own VC fund. So if you're a person who wants to do this, where would you suggest they start? What are their first steps?
Okay, so the first thing to set up your fund is in order to know if you want to do which areas would you be dealing to start investing and develop the VC. The most important thing will be to have it in if you, for example, are from Europe and you don't care very much where is the base where you want to be located. Then I would be searching which are the countries that will be more aligned with the expenses and all the legal terms involved with, and how much does it cost for you. By the other hand, normally people is developing the VC in their own country. You can get funds from your country governments, and also you have the possibility to go to the EIF, the European Innovation Funds European Investment Fund, the EIF, which is working globally in Europe, and they are giving also directly part of the 35% of the total amount of the fund in case that you pass the checking list that they already have. One of the most important things to start is to have a good track record and to prove that you have been already investing and which was your results behind that.
Okay, so that would be for your the personal investments you made, or the investments you made maybe already with a fund. And then you say the results, you mean your exit results or the profits that you made, something like that?
It's normally profits are related to the exit. So yes, that will be the answer. Besides, depending on which type of fund are you looking for, you can have the private one or the government funds. In case that you want a public fund, you can have and ask for more money as a ticket size of the fund. If you're doing privately, I really recommend you to make it little. which just has different perspective. If you got a little one, the ones who's deciding where to invest and deciding which geographical areas would you like to be investing into, it's you. If you for sure are asking money for your government, your country government, it will be focused on your country, or the other way, it will be with your EIF, as we mentioned it before.
Yeah. And is it hard to get the EIF money? Because if I look at projects that I have done, it's usually a lot of very administrative requirements to get the money actually released to your fund. Is that your experience, or is it quite easy?
It's long term, and it's not so easy.
No.
Because normally from 100 of applications that they already have, for sure they're repeating for those ones that they are already asking and they're coming from the past. So they just leave open a little percentage of new applications.
Yeah.
Which means that you're competing also with a lot of people that they would like also to be there. So easy, impossible is not impossible.
No, but maybe if you start off, it would be best if you start off with attracting money on your own and then add EIF later, because it will probably take longer.
Yeah.
Yeah.
And also, yeah, for sure. But the ticket size it's very different. And as you are getting your salaries depending of the management fee, this means that sometimes you don't even have a real normal salary in order to pay all the structure of the fund plus minimum two salaries linked to the work. So this is something that it's really like part of the criteria that you would like to approach.
Yeah.
Once that you want to start a fund. If you want to go the ticket size and build up a very big team, big team, at least 4 or 5 people, or if you want to go to the little one and just be in two and be the ones who is cooking at the same time that they're serving the. So that's a little bit more like a metaphor.
Yeah. Okay, so that's very interesting. So, for example, if you are with 2 people, right, and you want to start a fund with a small ticket size, what is the size of the fund you would suggest you start with?
5 million, 6 million. It would be easy to fundraise it with high net worth individuals, your LPs, and also it will be quicker in order to start the investment, to start the investment committees, and to make those decisions. As long as you got your thesis criteria set it up of where do you want to invest, which sector, which maturity, and which maturity. If you're doing a 5 million fund, it will be a pre-seed or seed in order to have at least 20, well, maybe not 20, but 15 startups in your portfolio. That will be more or less in average. Everything is in average because there's something that we have to talk about. Each fund has their own criteria investment. Okay.
Yeah. Okay. So what you're saying is, I mean, if I want to start this fund, first I look at which country do I want to settle in. Then I look at which kind of sector I want to invest in. Is it one or are there more sectors? And then I have to develop my criteria for my investments and find at least one partner to do it with me, right? Because you have to be at least 2 people. And then next to these 2 people, who do you need?
Well, actually, Georgie, you can do it alone if you got the money and you got the LPs. But normally there's more than 1 or 2. It's also give you a trust to the market that you're not the only one, and it's easier to fundraise if you're 2 or 3.
Yeah.
But that means that you cannot do it by your own. Some people get the startups that they make their own exit. They get the money and then they build up the fund and they start investing in other ones, no?
But of course, next to us, we also need committees, right? To help us. An investment committee.
Well, here's the point. Depending on where you want to start investing, if you, for example, are a biotech fund that is specifically investing only and only in biotech startups, what you do is your team knows about how to invest, about business models, about how to make due diligence and check the financials of the company. But at the same time, they need to understand about product. Those funds, for sure, there will be all these people that they understand about the product will be PhD professors. It will be people aligned in the biotech sector, in corporates or not, or in government, whatever, but they will be very focused only in one sector. Those funds that they have a wider investment criteria, they are agnostic sector. Actually, that's the way that we call it. What happens if we find a cybersecurity startup? Cybersecurity has a really black box behind, which means that it's not that our little team of 3 is going to be have the knowledge in cybersecurity, unless that we are only investing in cybersecurity. But if we are investing in a lot of different types of sectors, we're going to ask to someone linked to the cybersecurity sector to be our advisor. It's a win-win for both. That person is in another industry, but very focused, and they got deeper information and deeper knowledge about cybersecurity than us. So what we have is a very good knowledge of how to make a due diligence, and we always need someone expert from that sector. So could happen two things with this type of experts. We can ask them to be part of our advisor board, or we can just have a kind of relationship where they are looking of what are the new products, services coming into the market that they could also use for their own company. That's one thing. The other one is that they are proving and testing and also giving a feedback for us as a venture capital in order to see which other add values and weakness could have the project in per se. So this is why we are always, in general terms, using people that they really know about the market. That happens if our little team doesn't arrive to have this experience and knowledge in a deeper way.
Oh. Okay, thank you. And you spoke about choosing the country, right? The legal country where you want to establish your VC. If we look inside of Europe, which are countries that you find more attractive or as possibilities for establishing a VC fund?
Well, the best thing is to look at your own country, because you will have to apply, or you can apply to public funds. Those funds that the European Commission is doing it through the EIF and is giving it directly to the country, the economy minister or industry ministry, whatever. But that each country has their own mechanisms of how to apply and ask for that money. And they're normally one type of officers that they are already getting the money and making the selection and also making a due diligence of who is asking for the money. No? So that's the first step. The next step will be, okay, if we do not receive money from the government and we want to go public, let's gonna see which other countries is gonna be much more cheaper. Cheaper, it means that today in Delaware, the United States, it costs only $25,000 to set up a fund. Here in Europe, we don't have this access to set up funds at the same level like in the United States, which means that it's if I were someone that would like to start to set up a fund, I will be checking different the legal terms, and the expenses could be very different depending on the countries. If you're trying to set up in Luxembourg, maybe will give you more advantage in order to apply for European money, but it's 3 times more expensive than going to Ireland, for example. No? And that's the things that I will be. Also, it's important to know about the regulatory terms. Depending on the country, we have different ways. I know that Estonia and are looking very strongly to be one of the first countries that they wanted to start to make easy and not so complicated to establish a fund. But venture capital is something very interesting for that market, basically because it's a conductor to directly to the economy. The European Commission is giving money to a fund. The fund is giving it to startups, to actually the best ones, the ones that we know or we think that they're gonna go farther. And those startups, at the moment that they receive money, they are already hiring people. So it's one way, the way that we are activating the economy.
Okay, thank you. So your new fund, where will it be? Because you are looking at the 5th fund, right? Will it
The
be
5th fund,
established in Spain?
No, THCAP, the fund that I am with, we started the first one in Delaware. The second one, we set it up in Spain. The third one was in Spain, but the fourth one is a growth. And we established it in the US. And the fifth one was thanks to the government of Canada and our co-investor fund. They are giving, the government of Canada is being our anchor investor. And actually is the way we are setting up this injecting money in the economy through venture capital experts.
Exactly. So it's also very important, depending on the funding you can get and the situation your specific fund is in, which country you choose. So listening to you, every time you look for a different location, right? Depending on what the condition of your specific fund is.
Exactly. Also, it depends a lot of the maturity. I mean, if you're going a seed fund, you go in, your ticket size will be it will be less if you're being a Series A. So it means that depending on the maturity of the startup, you will have more or less joder, macho, estoy súper espesa. I really hated that the other one was super good. This one is like very, very like, I don't know what happens. It's like a bad energy in this iPod podcast. Okay, depending of the maturity of the startups that you're investing, the ticket size of the fund will be different. If you're going to a seed investment as a seed venture capital, you could be going from 300,000 up to 1.5 million. We always save 30% of the money in order to make follow-ons on those startups from our portfolio that they are making it in more than 5x, 6x, 7x, you know. So those ones that they're multiplying our money are those ones that we will start to put money on it. What happens is the venture capital are always doing investment in year 1, 2, 3, 4. Normally in year 5, what we do is we close and we start to fundraise for the next one. What is happening during the year 1 until year 4, the startup also are growing. And those ones that they're doing a very, very good performance are those ones that we will continue putting money in. We could making these follow-ons in order to avoid that in the next rounds, when they're coming bigger VCs behind, we avoid to be diluted. So this is why this is a mechanism that most of the funds we are doing it, okay, with our startups. But which is the difference between all of us? First is the ticket size. Secondly is the investment criteria. Third, we are entering in the company with different KPIs. VC will always love to have metrics before doing an investment. Those ones that they don't have any monthly return revenue, it will not be invested in general terms. Some funds, they are starting to do it before. But in a big average, most of us, we are not investing until they do not have any income. We want to see that they have proved the concept, the product and the service into the market. There's a minimum value product. We want to see that they're starting to invoice month 1, 10Ks, month 2, 20Ks, month 3, 35. And then is when we start to put the money into the company.
All right, thank you. So if I am now investing as a business angel and I'm considering to start up my own VC, what would the difference be for me? And why would it be a good idea to start a VC? And why would it be a good idea or a better idea to continue as a business angel as I'm doing now?
Well, it depends of the ticket size that you would like to put into the startup. A fund, it takes a lot more expenses, and to be by yourself, I think it's ridiculous that you are, because there are another type of like an SVP that you could make it's like a kind of a fund, but you don't have all these legal terms, and you don't have to have a very big budget with an SVP. So what you're doing is you're inviting another friend that they could put like 100,000 euros, and between 5 of you, you already got a ticket size of 500,000 euros, which you could start to make little investments as a business angel. If you only have 500,000 euros, I will never recommend you to go to a VC just because it's like it's another league. If you want to compete with the big ones that they are already established in the market and have a good name, you need to have also a cash behind. And as I said, there are some business angels. Normally, the business angels is helping at the first step, and sometimes they are following on, but not all the times. They could be only just making the first ticket of 50,000, okay, and then they're done, and they go for another one. So also business angels are switching depending on the startup. There are some business angels, in general terms, the business angels are investing in those startups that they already know the sector where they're dealing, and they have this kind of expertise. It is important, if I were a business angel, to make follow-ons. Yes, for those ones that they're really, in order to protect, again, their shares, in order to not be diluted.
Okay, so it's mostly also about the number of investments you want to make and the ticket size that you want to invest in. And if you want to broaden your horizons, those can be good reasons, I understand, to start a VC. But if you want to start investing in smaller tickets in the business that you know, you could do it as a business angel with a group of friends, which is actually easier and less work. Okay.
And also, I have to tell you something. It's important, Georgie. We receive 1,500 projects per year as a venture capital. We make due diligence of 80 and we invest in 4. Yeah. This is real conversion. Which does mean you're a business angel that you are by your own. Sometimes you don't even have capacity or time to absorb all the projects that you're receiving. And then to spend the time to analyze them and to do the due diligence, it's not the same when you were also doing it with another business angels, which it will be much more people looking at it, and it will be like a kind of an advisory board, as we were talking before. Even though a venture capital has people behind, that they're also supporting and having more overviews with different mindsets, different knowledge, and different professional backgrounds. What does it mean? That it gives us much more bigger perspective to approach without emotions.
Yeah.
With the startup. That's one thing. And also we have to remark that 90% of the time that a startup is stepping out from a VC portfolio is due to the team. The second reason is the team, and the third reason is the team.
Okay, yeah. So the team is the crucial factor which carries everything. Okay.
Yes, and it's the first reason why it's going to fall down a startup.
Yeah.
Not the business model. At the moment, when a startup is coming to a venture capital, we already have metrics. We already have seen that they have traction. We already saw that they got they are solving a problem and how they're going to make revenues with it and what is everything set up. The only thing that is not easy to control, because we are humans and things are changing from one year to another one, our mindset could be different. The relationship could be one very nice when they started, but not anymore now. And this is going directly against the company. So
yeah, exactly. So the team. Any other tips or tricks you would like to share with people who are considering starting up their own VC fund?
basically that it's important also in the to set up a fund, to have a good GPs with a good track record, with a proven track record, and also look at your secret sauce, which is going to be the difference between you and the other ones into the market. It's important to have something that is going to be an add value, and also it's going to take something differently to the other one.
And that's both towards the investors and towards the companies you finance, I suppose.
Yes.
Yeah. All right. Well, Taryn, thank you for those tips and tricks. Anything else you would like to add?
No, I'm super happy, and I'm here in case that you need us again to talk for how to fundraise and how to build up a venture capital.
I would like to thank Taryn very much for telling us about her experience, and we will hopefully see you again. Thank you very much.